Assalamu alaikum, everybody. So welcome to this weekly session of Park Launch. Before I initiate the session formally, just a few house rules. I think most of you are perhaps, you've attended these sessions in the past as well, but some of you may be first timers here. So just a basic few rules to be mindful of. With the exception of the speakers and the guest, we request everybody to stay on mute during the course of the session. Secondly, if you have any questions, please put those questions in the chat. We'll try to address those questions as we move through the session. There will be a dedicated slot towards the end for Q&A as well, but feel free to put in your questions as they come to your mind. And we'll try to pick them up whenever we feel relevant during the session. And also, I think the rule is that we'll keep the videos on for the people, for the guest, as well as the moderator, myself, Afzal and Rizwan, and everybody else perhaps can keep the videos off. So I think with those basic rules, let me get into formally initiate the session. So first of all, Park Launch, again, I think most of you are familiar, but some of you might be here for the first time. So Park Launch is a community that was founded about 1.5 years ago by Ali Fahad and a couple of other people. And the basic idea was to bring the Pakistani community together, essentially create a strong network of people around the world so that they can collaborate and draw value. And what has been astounding is the number of initiatives around this idea, but the quality of execution done by Park Launch has been just amazing. It's been I haven't seen anything executed this well by any organization, and I've been a part of many organizations. And during the past, I think 12, 18 months, at least to my knowledge, there are a number of new ventures that have been initiated through this community. There are a number of investments that have happened. There are a number of joint ventures that have happened. So, I'm really, a big fan of what this founding team is doing, and I really wish them best of luck. Today's session is going to be with Arcis Capital. We will let Afzal and Rizwan do the introductions of what the community is all about. But thematically, the reason why we are doing this is it's very clear to me that I think we talk about a lot of brain drain that is happening in Pakistan. And I see that brain drain that has happened over the past 15, 20, 30 years has come to a point, and also that the Pakistan itself has come to a point where the two communities inside of Pakistan and outside of Pakistan can come together and do some really magical things together. And Arcis Capital, I think, is really at the cutting edge of that. I think they are looking at Pakistan in a very, very interesting way, besides other sort of geographies as well. A bit of a personal introduction. My name is Owais Anjum. I am the CEO of Emumba. It's an IT services company based out of Islamabad. We've been doing this for the past 10 years. We're working with some of the largest enterprises in the world, including Microsoft, Salesforce, 810 Networks. And since I think there are a number of people from GIK over here, I'm also from GIK from the very first batch. The first half of my career was spent in the Valley. I spent a lot of personal time volunteering with Open Silicon Valley. I was the founding president of Open Islamabad and still serve on the board. And that is why I think I really love to see these kind of initiatives coming to good fruition. With that introduction, Afzal and Rizwan, I would invite you to maybe take a few moments to introduce yourselves, and then we'll get into more of a fireside chat kind of a session. So maybe Afzal, you can get things started.
Okay, so we're gonna change things around a little bit. I'll ask Rizwan to introduce himself first. Okay. And I think that is the bridge between me and you and Park Launch. And so I'll give him the privilege of introducing himself first, and then I could take us into introducing myself as well as the Arcis Capital Partners. Rizwan, do you mind?
Sure. No, I can start. Well, my name is Rizwan Muhammad. So let me start way back. I grew up in and around Lahore and Gujranwala. And like Owais was talking about the brain drain. From Gujranwala, I went to Government College Lahore. That's where I met Hal when we were doing our pre-engineering stuff. And at that time, only game in town was either you, after you do your training, you get out of the country somewhere, or you go to UAT if you want to do engineering. And that's what I ended up doing. I went to UAT, and from UAT, for master's, I came to US and did my computer engineering from Syracuse University. After that, I moved to Bay Area and never moved out. So it has been a long stay here, about 25 years, 25 plus. Most of my life, I've been working here as in many different capacities. Started as an engineer, went into engineering management, went into consulting. I did consulting for a small company called HUF Software, which is acquired by OpenText. That was more on the BI side of the house, business intelligence and reporting and so on. From there, I did another startup. That was also a startup, another startup, which got acquired by Hitachi. You can see my experience has been engineering, then more into consulting, and then a startup. And once I got into Hitachi, I shift gears and I moved into product management. So I have about 15 plus years of product management experience. Did a lot of different things at Hitachi, including their traditional software, which was around infrastructure management. But then about 5-6 years ago, Hitachi wanted to transform themselves from an infrastructure company into more of a digital data management company. So that's when they asked me to set up a team, which was focused on vertical solutions around the digital solutions. So that's what I did. I set up a team over there, and that started the whole journey for Hitachi Data System into Hitachi Tarar, which is it called right now. They ended up changing the name as well. So in doing so, there were a lot of solutions we built for public safety, as well as communication, media, entertainment, and definitely around machine learning, data center automation, and so on. So that's my background. That's my experience. Last year, actually, year before that, 2019, when I was leaving Hitachi, Al asked me, hey, have you considered coming into the private equity side? And it was kind of a new thing for me. Obviously, my career has been in engineering and product management, but that was a great opportunity because when I talked to him, it seemed like all my background, all the stuff that I've been working on could be quite useful, especially on the deal side of the house where you are looking at different companies and analyzing them and kind of making decisions, which one we should really be investing. So that has been a great opportunity. I enjoyed it so far, working with Al, as well as working in a public equity firm on the deal side of the house. So briefly, that's the background which I have.
Thank you, Rizwan.
So Owais, I would pick up from where Rizwan left off. My name is Afzal Tarar. I go by Al. A bad habit of moving to US and picking a US nickname. So that's just my short name. So I'm a Gujranwala boy. I was born and raised in Gujranwala. Actually, most of my family members still live in Gujranwala. So mashallah, I have 11 siblings. One of them passed, but 10 of them are alive. 9 of them live in Gujranwala. And one of my younger brothers lives in Canada. So that's a little personal story. I come from a family of entrepreneurs in a Pakistani way. Everybody owns their own business. So that's the kind of family I come from. And I was somewhat good at studies, I guess. And I took a different path. So I'm actually the only person in my family who did not work in family-related business. So I went to, as Rizwan said, Government College Lahore. That's where Rizwan and I met. But our friendship actually was formed after we finished Government College Lahore. There was a gap here between GC and UET. So we were both admitted to UET. And we used to hang out at American Center and other places, taking computer science courses in our free time, and a lot of swimming in Rizwan's hometown in Nandipur, right? So that's where our friendship was formed. And I applied to scholarship programs across the globe. I got a scholarship to go to China from government of Pakistan. So that was in 1989. So I was one of the, I don't know, second, third, or fourth batch of students that were sent from Pakistan to China on cultural exchange program. So instead of going to UET, I went to the MIT of China, a university called Tsinghua University. Many of you might have heard of it. It's the premier engineering university in China. I studied Chinese language, and I did a lot of other stuff. So I was 18 years old, and I scholarship from government of Pakistan and also government of China. So half of my scholarship was from either side. So I lived a very comfortable life and I had a lot of fun going to school in China. And in 1989, I graduated. I'm sorry, I went to China in 82. I misspoke earlier. So 1982. So 89, I graduated from China with a 6-year program, a 1-year language program and 5-year engineering. So I went to school a little longer than Rizwan. And then, believe it or not, I did NLG, NLP at that time. So some of you may not realize, so some of these concepts have been around for a long time. So it used to be called pattern recognition, right? Another friend who's on the phone is Noor Hassan. He's also my alum from Tsinghua University, and a dear friend of mine. And he is also Islamabad College for Boys alum. So some of you might be ICB alums, right? Is it called Islamabad School or Islamabad College of Boys? One of the two.
Anyway, college, yeah.
Yeah, college. So he is my schoolmate as well from China. So that's how a China connection came to bear. And in 89, I came to US to go to graduate school. I think Rizwan came to the US about the same time. So we've been in the US about the same time. I took a different path. Instead of going into technology, I went into banking and management consulting. So I spent 25 years in management consulting, advising some of the world's largest companies how to improve their performance. So I worked at Deloitte, IBM, Business Consulting, Bearing Point, which came out of KPMG. Some of you may know them. And lastly, PwC. So my last role was a partner with PricewaterhouseCoopers, PwC, first in Shanghai and then in the US. A little additional angle about China is in 2005, I was asked to go back to China to help Chinese companies develop their business. And so I spent additional 7 years in Shanghai, in China, I should say, between 2005 and 2012. So in aggregate, I have spent 14 years in China. So you can add these things up, 18 years in Pakistan, which was my mostly youth, right, growing up. And then I spent all of my life since then abroad. So I'm far removed from Pakistan than I think Rizwan, other than my family is still in Gujarat. And I spent 14 years in China. So I have kind of 3 homes, so to speak, Pakistan, China, and US. So this is how I view the world of business. This is how I view the world of personal world and friendships formed over these 3 different countries and regions. So that's a little bit about me.
Thank you, Afzal. So thank you, Afzal and Rizwan. This is very useful. I think these were detailed answers, but it's very, very useful to know the who part before we talk about the what part. So thanks for giving that background information. So let's dive into the topic here. It would be very useful if you would give a short introduction to what Arcis is all about. And then we will take a few questions based on that. So why don't you introduce what Arcis Capital Partners is and what its focus areas are?
Owais, very happy to do that. So I think our personal professional DNA is the origin of Arcis Capital Partner in every sense. The name, the logo, everything we talk about is cross-border. So if you see the Arcis logo, there's an arc in it. That arc is talking about building the bridges between US and China, US and Pakistan, and between China and Pakistan, for that matter. So that's the heritage of the firm. So we are a twin strategy firm. Today, we're only going to talk about technology, but we also have a real estate strategy under a different brand. And for a small firm, we have offices or presence in New York, California, Florida, China, and Hong Kong. So what do we do? Maybe I can use a page to summarize what Arcis Capital Partner is. We are a technology investment firm where we take investments in post-revenue technology ventures. Okay, so I don't want the pre-revenue companies on the phone here to be discouraged. So those are the future portfolio companies that we might invest in, right? But we work with them, we start to talk to them early during their pre-revenue stage and invest after they become post-revenue. We invest in primarily three areas. One is what we call digital technologies. So this is a larger umbrella, IoT, TMT, companies like Emumba, right? Owais, like your company, will be an example. Max's company would be an example, right? Logistics and so forth. Second area we invest in is medical devices. So we don't invest in biopharma, only in medical devices because we are engineers and scientists. We like the things that we can touch and feel. Third area we invest in is the sustainability related technologies, technologies that help repurpose materials, matters, garbage repurposing, water purification, things of that sort. Those are three areas where we have honed some expertise, and we have built a very deep global connectivity as well. Then, after we invest in these companies, we use our growth engineering approach, basically using our engineering and management consulting background to help companies improve their performance. We take our companies to China and other parts of Asia, and hopefully in the future in Pakistan as well, to grow emerging markets. We are raising a $150 million fund, including parallel vehicles. We have had first close in October last year. We're expecting a second close in the next few weeks. We're targeting to deliver 4x MOIC, which is multiple on invested capital, or 30+% of IRR. That will be a very brief introduction on Arcis Capital Partners.
This is useful. So from what I know, I think you did your first investment in a Pakistani company as well. And when I say a Pakistani company, it's a company based out of Pakistan and focused on Pakistan as well. Why don't you talk a little bit about that? Because I think that was perhaps your first entry into the Pakistani market. And also, if you could give an overview of some of your more interesting portfolio companies, just so that people have some context of what those companies look like.
Yeah, so Owais, that's a very good question. So this is our investment portfolio and pipeline page. So guys on the phone, you can see there are 5 things that we have listed on the top. So these are 5 actual investments that we have already made through our small initial close. And the first company here is a Danish startup. Second one is a US medical device company based in California. Third one is a Massachusetts and Ohio-based sustainability tech, Green Line Group. Fourth one is Cerebri AI. Max, this is based in Austin, Texas, your hometown. So they use AI for customer experience. The fifth one is Wahed Group. So Wahed Group and Wahed Logistics. They're a US domiciled company, but their almost entire operation is based in Pakistan. Their CEO is based in Islamabad. And they're using technology-enabled logistics to modernize trucking and trucking-related services in Pakistan. And this was a very special situation for us, Owais. We were not keenly seeking to invest in Pakistan, but this opportunity kind of fell in our lap. And there was a multifactorial connectivity with us which made it possible for us to invest in this company. So we are actually their only institutional investor at this stage. They're post-revenue and growing significantly. And I think for some of your colleagues who are listening to this call, this webcast, they should note the third column. So when we were underwriting these investments, these are the multiples that we underwrote for. Basically, we are saying is in our internal analysis, Wahed Group could deliver up to 12% or even more multiple on our investment over a 5-year period. So that's very briefly on Wahed Group.
This is useful. So let's keep this slide on. Let's not. Let's keep it on. So let me ask a very blunt and perhaps a bit of an unfair question as well. The investment in Pakistan, was that a real objective assessment, or was there a bit of an emotional element involved in it as well? And what's your take on Pakistan? I mean, why Pakistan? Why now? Is it anything different? Why didn't this happen in the past? Why is it happening now?
I think you and I talked about this with Rizwan the other day. I think first, we don't make emotional decisions about any investment, but you get emotionally attached to companies once you invest in them or once you decide to invest in them. And that's not a bad thing, right? Then because we are a part owner of the company, so we have a very deep responsibility or sense of responsibility toward our investors. First, that we're trying to protect their investment. Second, to our portfolio company, we want them to succeed in every sense of the word. So as I said, we were not keenly seeking to invest, but this opportunity came to us. Now we are embedded with them and we are actively engaged with them on a regular basis to make sure they are successful. The same is true for other companies. There's no difference whether the company is based in Pakistan or US or Denmark. Our approach is same. Now, I think your broader question about Pakistan is that it's an emerging economy, fast-growing emerging economy. So there's a lot of potential, but we have to be very, very careful how we pick and choose who to invest with, who to invest in, right? I think that's where we have to be careful. Same would be said about China and other emerging economies.
Thank you for that. So I see Emumba listed over there as well, and I think it sort of perhaps it makes sense for me to give some context to that as to how we met each other. Emumba's growth has really been through network. It's been through the people that we know, and that network obviously is continuing to grow. And we sort of met Rizwan in the Bay Area a couple of years ago, and then Rizwan visited Pakistan, came to our office, and that was sort of the beginning of our relationship. We saw tremendous value in what Rizwan could bring to Emumba, and Rizwan was thrilled to see what Emumba was capable of and what we had already delivered, right? So that was the beginning of the relationship. So our relationship with Arcis has not been a typical one, the one that Afzal explained. I think it was more organic. And I think as we are talking about, and again, don't want to get into that tangent too much, but we're already thinking about, spinning out one of our solutions. And I guess that would be one avenue where perhaps Emumba becomes one of a conventional portfolio companies as well. So really look forward to that milestone. So on this topic, Rizwan, let me get back to you on more of a personal question. I see a lot of people in the US and other geographies who want to be in the position that you're in now, right? But the transition from their conventional jobs to what you're doing now is very scary for them, right? Because this brings a lot of uncertainty, this brings a lot of gray areas, and most of the people are not used to that. There's a bit of a background. I wonder where that's coming from. Ali, can you maybe see? All right, maybe, yeah, that's gone. So, so that transition, and also, I think a related question is, I meet a lot of people who have this, intention or ambition to move back to Pakistan, but they don't know how, right? And I also talk about that a little bit as to how do you see coming back to Pakistan? Is that a binary decision? Does Arcis enable that in a different way? How do you see that move, if at all, right, in the context of this transition?
Right. Yeah. So I think going back to the transition, scary transition, and how your career progresses, and how you see things. It's all about, actually, Al once I was talking to Al about this, and he mentioned to me, and it made sense to me. He said there is like 3 different phases in your life. There is the first phase when you go to school.
Chapters.
Okay. 3 chapters. So you go to school, you basically know what you want to graduate in, you are looking for your first job, and you are picking your career at that point, right? So that's your first chapter. Second chapter, which is the middle chapter, that's where you are looking for growth, where you are looking to become something, and you are completely focused on your career. You want to grow in that, whichever career you kind of chose. The third one is you are looking towards the end. You are kind of going closer to your retirement. And by that time, you have these other emotions which are in you, which is essentially giving back to the community, helping where you came from. All those things kind of, start to creep up to some extent. And it depends on the personality. Some people have that feeling a lot more, some people have less. And you're looking for some continuity towards the retirement, and you are actually looking for, in my case, I was looking for 3 fundamental things. I mean, 2 more, and then third one. One was freedom of time freedom, because towards the end of your career, you need that, you want that. Other one was financial freedom. You want not worry about the finances and stuff like that. And the third one was to be in a position where you can do more than just work, which is essentially giving back, helping, and being in a position where you can help others. So those 3 things basically drove my decisions towards the end to move into private equity, more of a partnership type of job.
Owais, I think he's not telling you one thing. That
Right.
He tried to convince me to not do what I was doing for first few years.
Because it's the dark side.
Yeah. and then he transitioned to the dark side.
Right. So essentially, if you really look at, I was, during introduction also, I was talking about this thing that my career started as an engineer, and then you basically look at yourself, what type of attitude you have. And I moved into consulting because I enjoyed working with the customers and so on, doing projects which are tangible. So that's what I did. And then it was a natural progression from there. If I'm going to remain in the corporate world rather than going into work for a consulting company, to move into product management, where you kind of have a control over what is being built and how it is being taken to the market and so on. So once you actually go into product management, reach a certain stage, senior director, a VP, then you start thinking about your end game at that point, and you say, okay, I have a few paths where I can go from there. One is that I could continue on this path and become chief product officer. That's not a bad thing to do. The other one is go more on the sales side, business development and so on, which is still in the corporate, world. But then the third one is instead of remaining over there, this was actually wasn't in my mind, but it kind of fell in my lap of sort, if you want to say so, because Al had already started this thing 6 years ago, right? And so I started considering that. Said, okay, I could possibly make that transition, especially when there is an opportunity available. So
Afzal has done all the hard work.
He has done all the hard work, right? Essentially. So I think to some extent, my transition was a de-risk because of the fact that Al had already spent 6 years doing that, and this was an opportunity I couldn't really refuse, couldn't miss, right? So those are the 3 paths which I could have taken any one of them, and I ended up on picking this one.
I mean, joking aside, we are very blessed to have Rizwan with us. MashaAllah, he's been a tremendous, I think, addition to our core team. So we're very
Absolutely.
thankful.
So we've been working with Rizwan, so I'll second that.
Right. So as to address that second part of your question, which I missed, moving back to Pakistan, right? I think more and more what we are all seeing, I'm sure everybody else is kind of feeling the same thing. The world is becoming a global village. So people are not going to live at one place anymore and not do business at one place anymore. It is a global phenomenon. It's happening all over the place. So essentially, the idea really is no matter where you live, and most of the work is happening virtually now. So it doesn't really matter where you live and where you work. So it's much easier now as compared to maybe if you were talking to somebody 30 years ago, and that question would have been quite hard to kind of answer. You know, essentially, you had to give up something over here in US and move completely back to Pakistan. I don't think you have to do that anymore. Essentially, we'll have a place both in Pakistan as well as in US. That's what kind of I'm thinking. As more and more we work with Pakistani firms, obviously we'll be spending a lot more time in Pakistan as well. And I would love that. I mean, that's how it's going to go.
Very insightful. So Rizwan, can you give or maybe Afzal, whoever is relevant here, give us a sense of your typical due diligence process? And I think it's very important in the context of, you know, there may be people or companies in this group or people who would be consuming this information offline as to what would be a good time for them to engage with you. How does your process look like? For instance, you know, we have of course been engaged with you, and it's very clear that you know, when we started our discussions, that was not a point where we are trying to raise any capital, but you know, there is definitely a milestone that we have in mind, right? So, do you prefer to engage with companies with potential even before they're sort of you know, generating revenue, or do you have a very strict you know, delineation that okay, they have to be revenue positive before they even start the conversation with you? So give a sense of your due diligence process and when should the company be reaching out to you?
Rizwan?
El, you want to start with the philosophy and then we can come to this?
Yeah, okay, that's a good one. Maybe we can spend a bit. We have a lot of slides, but we don't want it to cover too much of slide. For some of you who are in the venture business, I think many of you are, you might know Cambridge Associates. Cambridge Associates is one of the world's largest investment advisor and manager. So they have done actually most work in venture capital data. So a lot of you are also data centric, right? So they have done data analysis. They concluded that growth equity is actually one of the best performing strategies. I'll just spend a minute on here. And I'm not going to read it to you, but this is in our pitch deck and also on our website if you want to read it. So growth equity is a hybrid between venture capital and private equity, right? This is what we call ourselves. We are not a venture capital firm. We are a growth equity firm. So growth is the word that you will see often and pretty much every page in our pitch deck, because that's what we do. So growth equity has delivered historically the best returns vis-a-vis traditional buyout versus traditional venture capital. And it also has a lower loss ratio. Now, having said that, we are using Cambridge Associates growth equity model, and we modified it and adopted it to our needs. So, Owais, to answer your question, we are typically looking at companies that have a very, very high year-on-year growth. Some of them are growing 100%, some of them growing 50%. They have a very high gross margin and low capital expenditure. We actually have walked away from many attractive companies because they have a very high capital expenditure ratio. Now, when we look at companies, we want to make sure that there's a potential of delivering 10 times of our capital over 5 years. But this is at underwriting. And obviously some companies are not going to perform as well. Some companies are going to perform much, much better, right? We are also looking at liquidity within 5+ years because that's the fun term for us. We're also looking at very good valuation, attractive valuation, and very strong terms. Remember, we're trying to protect our investors first and foremost. If our investors don't make money, we don't make money. What we do is, if you look at this dark line here, revenue, our goal is to use our growth, engineering, and related advisory work that we do for our portfolio companies, taking their revenue up to this dotted line. Same is true for their EBITDA, improving the speed of the EBITDA growth, improving the speed of their revenue growth through our very active engagement with each and every company. I will pass mic to Rizwan. Rizwan, you can cover the criteria.
Right. So essentially, looking at this chart, I think it gives you an idea that we do look at a huge number of companies. Those deals come to us from many different sources. Obviously, being in the industry, we have made a lot of connections over the years. Both Al's connections, my connections, and we have a lot of other partners who are not full-time partners, but they do have similar kind of connections. We do digital marketing as well. We also work with some of the other companies who actually source these deals to us. So you can imagine how many deals we could be getting. We actually definitely seriously explore at least, if not more, 5, 6 every week, at least. We end up really going through our process, end up really investing in maybe 1 or 2% of them. So it's a very, very strict process which we go through. Based on the philosophy which Al was talking about, there is a filter we apply. Obviously, we have a scorecarding which we do essentially to filter out some of the companies. Fundamentally at the high level, if you really want to think about it, other than what Al spoke about in terms of where financially those companies are, there is 3-4 things we look at. One is from the market point of view. We are looking at those markets which are growing fast, because that's a recipe for success. If the market is growing very fast, obviously the chances of success go up and high. The second thing which we look at is really, is there really a problem to be solved over there? And has this company figured out how to solve that problem? Do they have certain IP? Do they have some patents and so on, which ensure us and de-risk our investment from the point of view of whether they have something tangible to solve that one critical problem or 2 critical problems in that particular area. The next one, which is pretty big for us, is really the management team. I think that is the most important factor which we really look at, because if the management team is strong, they will go through any difficulties which come their way. They'll be able to change their direction also if that is what is required. So those are the large things if you look at. Those 3 things are really large things if you look at. And obviously, as being a firm which is growth advisory, especially focused in China, we also look at those aspects. If some companies are going to really benefit by working with us very closely, and can we help them to open up new markets, especially in China, right? So that's a fundamental criteria which we really employ. And based on my background, Al was talking about, what I brought to the table, essentially 15 years of product management experience, all the different processes and methodologies which we use over there, they're all relevant over here as well, right? So from the technology analysis, technology assessment point of view, definitely all that, background helps. And then obviously we have experts from the financial perspective as well, who are kind of doing the due diligence from that point of view. So that's all.
Also, all right, this is useful. So, so a company that is successful in, securing funds from you, what does a typical due diligence cycle in terms of time look like? How many months? How many weeks?
It varies a lot because, we are looking at these bigger trends, right? So sometimes we get convinced very quickly, and other times we find some areas of concerns. Then we go into even more deeper due diligence, and trying to understand what is going on with it. Because at the end of the day, what we want to do is be useful and helpful. And the question really is, even if a company is in trouble or in problem, can we help solve that problem for them?
I think, Owais, what's happening is that in these 6 years, we have created a very a global connectivity in different ecosystems. So for AI company, as an example, or particularly AI-based marketing company, we already think of 5 different strategic integrations that we can do together. So when a new company comes in, we immediately think, oh, can this be a good add-on to existing investment that we have made? Another medical device company that we're looking to invest in, say, can we leverage all the good work that we have done for the existing medical device company? A new logistics company come to our attention and we say, oh, could it be complementary to what we have done with Vahid Group? Or how would it compete with Vahid Group? How would it work with Vahid? So we are already beginning to think. So it could vary. On the average, for a go no go decision, we make very quickly saying, is it a possible investment or not within a couple of weeks. But our underwriting can take several months, 2 to 3 months.
All right. Let's also talk a little bit about the brand Pakistan. Of course, you are using investors' money, right? And Pakistan has had a very tarnished brand in the past, right? My personal take is that I think the major transformation that we've seen, the positive transformation that we've seen in Pakistan has been around the branding of the country. That and typically brands don't improve so quickly, but we've seen a tremendous positivity going with the brand Pakistan, particularly in the startup space. Recently, we've seen a tier 1 Silicon Valley investor investing in a company in Pakistan. There are positive articles coming out of TechCrunch. There are positive articles coming out of Forbes. And personally, for me, if I were to raise money at this point, it wouldn't be absolutely ludicrous for me, being a Pakistani sitting in Pakistan, doing a startup in Pakistan, to go pitch to a tier 1 investor in the Silicon Valley. I would not have thought of doing that 3-4 years ago. So give me your take on the brand Pakistan. Where is it headed? And do you see any pushback from your investors when you are, evaluating or investing in companies based out of Pakistan?
And you want to start, or you want me to?
Yeah, Rizwan, I think I could open it, but I think this is perhaps closer to you in terms of the deal management. But I think in general, venture capital and growth equity, they would have probably different sentiment. So venture capital, the way it operates, they invest in many, many companies using the same fund, sometimes hundreds of companies. So their gaming and their analysis could be at a different level. We are a growth equity investment firm, so we invest maybe $7 to $10 million per company. That's our target. So in order for us to do that very well and still deliver 4x return, we have to invest in companies that have 10x potential. You can see the bottom of this pyramid, right? This is very, very critical for us. So this could more easily happen in Pakistan, more easily happen in China because of the fast-growing macroeconomic environment. But the emerging market risk also goes up. So in our internal deliberation would be how to balance the two. I say, what if we invest in XYZ group that is principally based in Pakistan? How do we manage the risk? Then say, oh, should we have a partner in Pakistan? Should we have team? Should we partner with somebody? So I think we would be looking at some of those opportunities. We want to be on the ground closer to those portfolio companies where possible. So if we have a partner in China, a person who is based in China, is native of China, right? So he travels around China, helping us look after our activities. We don't quite have that in Pakistan. So we're right now relying on friends. So we have some highly placed friends, and we call sometimes for favors, saying, can you please look into this person, this company, right? And we have so many friends who scare the hell out of us and say, don't do this. You guys could lose your pants and shirts and shorts and whatever, right? So we've been very careful in putting our toe in the water, so to speak. But over time, our plan is to grow our activity there.
Okay.
Sorry.
Rizwan, your take, and then we can move on to a few questions that we have in the social window. So why don't you give a quick take on this, and then we'll move on to those questions.
Sure. Yeah. So brand Pakistan, right? So just to kind of let you kind of know, I have been a lot more closer to Pakistan as Al has been, especially when I was working for Hitachi, and some of my colleagues moved back to Pakistan, and they started different services organization companies, and I've been trying to give business back to Pakistan, even from Hitachi. And believe it or not, every time it got stopped by risk and compliance team. That was the issue with the brand Pakistan, the name Pakistan, because they would show me a big map where there was a legend which was showing all kind of troubles, including corruption and terrorism and all sort of stuff, like 15 different items in the legend. And they'll show me the map and they'll say, look, each and every one of them is there on the Pakistan, map. So that was the issue. But what I've seen over the past, 15 years or so, especially, and I would say 20 years, all the investment Pakistan has done with the new schools and stuff, GIK started right when we graduated from UAT. And obviously there's a FAST, there's NUS, there's all sorts of schools now. We used to have only 200 people in our total electrical engineering class coming out of UAT, and maybe 50 more from Texas. But now, if you really look at it, I think maybe even Lahore is producing more than 3,000 or 5,000 computer scientists. And that actually has an impact. So what has happened is that those people, when they came to US for higher education or whatnot, or started working, they are now in positions, critical positions, where they can actually influence the decision making. And over the past 15 years, thanks God, no other 9/11 type of thing has happened. And Afghanistan is de-escalating so slowly. All those things are really contributing towards basically essentially making the brand Pakistan a lot more palatable, if you want to think from that point of view. And all the success which we are having right now, it is going to actually further speed up this whole process because the world is watching. The initial investments that are coming in, if they are successful, it's going to just open up the floodgates, I believe. So we are at the right point from the Pakistan point of view, where we will see a lot of new companies kind of emerging and a lot of investment coming in, and the success of that is going to drive everything else.
Yeah, and I couldn't agree more. I think the intellectual capital that we have outside of Pakistan in the decision-making position, I think we've never had that opportunity before. So I think this is a really point of inflection.
The critical mass.
Yes. I think one more question from my side, but I think we will reserve it for the end if we have time, and that's particularly for you, Afzal, that I think Pakistan, US, China, this combination doesn't look politically correct to me. So I'd like to take your take on that. But let's take a few questions from the social chat, and let's try to address them. There are at least 3 questions that I want to bring up. The first one is from Max, and I'll just read it out here. How do you see the trend? In US-China cross-border investment, especially with regards to Hong Kong. As context, the DD case and other risks around Hong Kong plus opportunities in the US have convinced us to recently re-domicile from Hong Kong to USA.
Yeah, I think this is a broader, more complex question. And Max, maybe we can talk offline as well. So there is a significantly increased risk in US-China relations, and Hong Kong is in a difficult pickle. But the growth opportunity in China remains, and it's not going anywhere. So I think our approach to doing business with China would change. It's continuing to change, and it will continue to evolve. So what we are doing is we are not investing in China. We are investing in primarily non-Chinese companies and bringing them to China. So we are giving them a market access to China. And we're not investing in sensitive technologies either. some of our sensitive technologies do face difficult time, especially AI-based and privacy-related technology solution. So, but we are committed, but we are also de-emphasizing. We used to be much more focused on China. We have reduced our focus on China, but nonetheless, China is core part of our strategy. We're expanding into Pakistan. We're expanding into other countries.
Okay, thank you. And I guess the next question, Rizwan, maybe this is more for you. And this is around the selection criteria. And the question is, what is considered as a strong management team? What criteria you look for in terms of defining what a strong management team looks like? Maybe you can, share a few high-level thoughts.
Yeah, so I think I will probably chime in into that too, because we had that experience with some of our teams, the management teams. But essentially, experience is important if they have done something like that in the past and they understand what it means to take a company, through its spaces as you start. But sometimes it's just the personalities, right? You talk to people, you kind of understand them, and you realize, I mean, sometimes a young person could be as capable as an older person. It has nothing to do with age. It has to do with experience. It has to do with attitude. It has to do with, how tenacious they are in their approach and doing things, and how open they are. For us, I think it's very important that are we partnering together in terms of making this whole venture successful, or rather somebody has a very set and fixed ideas, right? So flexibility of the management team and the capability is important.
I think some people might take it in a negative way, but I'm gonna say it because this is how we actually view the world. Experience of doing what you do is very, very important. So we are not investing in typical, what do you call, venture startup business where somebody just had an idea in their garage and they launched the company and they have never done this before. They might be successful, but we don't invest in those businesses. We invest in businesses where people who are starting the company, they have relevant, pertinent experience and number of years. So if you look at the management teams of each one of our companies, I think you will see some of them have 20-year experience in that particular business. They have probably done 1 or 2 startups already, and that's a very important part of our consideration, right? Particularly if we are making a larger investment. But yeah, we also think that a lot of great ideas are coming from newer, younger people who have never done this before. But would we invest in them? I don't know, probably not.
Yeah. So there's a follow-up question.
Markedly different company in order for us to take investment.
So there's a follow-up question on the same topic by Raheel. He's asking whether it's passion versus experience. What's your take on it? For me, it's passion and experience.
Experience any day. Any day. But once you have experience, a passion for your business is critical, because it's very, very difficult to continue your business. You can see at my tender age, I started, Arcis Capital Partners 6 years ago, right? It's not easy. Yeah. And everybody and their brother was telling me, don't do it, right? But I have the passion and the resources, but then I'm relying on my, experience to continue to learn and evolve. And similar is true for all of our portfolio companies.
Yeah.
And not all of them are my age. Some of them are older than me. Some of them are much younger than me.
And then another question, what's your nature of investment in Yum Brands?
I don't think we have investment in Yum Brand. If their logo was, they are probably existing investor in one of our portfolio companies.
Yeah, I thought
we have not invested in Yum Brands.
Yeah, okay, that clarifies. Then there's one more question. Let me see if I understand this correctly. How does the company valuation work? Because there are no expertise available to estimate company/product value. It's a big hurdle in growth. I guess the question is really, how does the valuation come into play? Of course, there's no good answer to that, but I think the question is around valuation. How do you go about?
Yeah, so I think we look at, so we have a very evolved and some may say complex valuation process. One of our colleagues who's on the phone, Omer Khalid, he is also a Pakistani-American. He runs our valuation. So if he was speaking, he would tell you how many different ways we run the valuation. We do multiple scenarios. We do base case scenario. We up case, a down case. We compare the companies with their peers. So for example, if we are looking at Emumba, for example, we will look at Emumba's peers, domestically and abroad. We will look at exits examples domestically and abroad. We will look at good, bad, and ugly cases. We look at your financial model. We look at your pro forma over the next 5 years. Then we'll also add a discount of emerging market discount, etc. So it's a multifactorial process. Happy to talk offline, Raheel, if you have a company in mind. We will also be happy to assist some of our friends' companies if you're looking for some input.
Yeah, this question was from Sultan Shah, by the way. And I guess we're at the tail end of the session. So let me, there are a few more questions that unfortunately will not be able to take, but I think here's the final one that I'd like to both of you to take up. What is your ask, if any, from this group, or any message that you have for this group?
We welcome new friendships through this group. And we also look for doing more business with the people on this group or people that you know. We are doing two things in parallel every day, every night, every week. One is raising money for our fund so we can allocate more money to different portfolio companies. Second is we're looking for very attractive, strong deal flow. So if you have companies that you think may fit our bill, please share those with us. If you know somebody who might want to invest in our fund, we will welcome those introductions as well.
Right. So I'll just add to this. Investing in our fund, that from the de-risking point of view, even if we invest in emerging markets like Pakistan, what happens is that we are investing in so many other firms or companies as well, which are actually in the US and Canada and in the rest of the world in Europe. So if you are investing with us, it is not investing only in one particular region, right? So it's based on our whole philosophy. There may be one or two companies which are part of the emerging markets like Pakistan. We already have one company where we invested in, but your investment in the fund is being de-risked because you are investing in all of them, right? So that's one of the advantages of investing in a fund like us. So just wanted to kind of add that in there. Thank you.
So there are a couple of requests. People are asking for the deck that you were showing the slides from. If that's not confidential, it would be great if we could share that with the group. Also, what would be a good email to get in touch with you guys if anybody from this group or otherwise needs to get in touch with you?
It's our first name, Rizwan or Afzal, at ArcisCap.com. So ArcisCap.com. So send us an email to either one of us, or if you don't remember our name, just say info@ArcisCap.com. We'll be happy to follow up.
Okay, and do you see any issues with sharing the deck?
I think whoever wants to see the deck, they should send us an email. We'll be happy to send it to them.
Okay. All right. I think so. I think we are at the end of the clock here. So Afzal and Rizwan, thank you very much for taking the time. This was a very, very useful, insightful session. I've personally been seeing how you guys operate and really look forward to your next set of investments, and also look forward to Emumba and Arcis working together more closely in a number of things that we're already exploring. I'm sure there are a few questions that we were not able to answer. We'll try to connect on them offline. And once again, Ali and Park Launch Group, thank you guys very much for organizing and curating this. You guys are doing a tremendous job. Thank you very much. So with that, let's close the session. Thank you everybody who participated.
Thank you. Shukriya. Khuda Hafiz.
Khuda Hafiz.